All right, peeps. Crypto's dropping pretty hard right now, pretty close to 27,000. Everything else is dropped. Ripple's dropped by, XRP's dropped by 12%. ADA's dropped by 6%. Doge's dropped by 9%. Shiba's dropped by 12%. VET's dropped by 7% today. Everything is down, and you're probably wondering why. When can I get some cheap crypto? You can pretty much get it right now. And as for the reasons, there's a couple of reasons. One, on the Ripple case, and this affects Ripple mainly, but other cryptos as well, obviously. The judge did grant the SEC permission to file the emergency repeal. Now, that does not mean that they got the appeal. That just means they're allowed to file one. I was hoping the judge would just shut them down, and obviously that affects all of crypto, because if the Ripple case gets overturned, obviously that's bad for all the altcoins, because that would actually make altcoins securities until we can appeal up to the Supreme Court, and that could take ages, and ages. So that's one of the reasons Ripple's more down than the other coins, almost falling below 50 cents. But they're not the only ones. Nothing else is actually being spared right now as Bitcoin is going down. The stock market is also down right today, and I do think that also has an effect on crypto. If you check on CNBC, you'll see that we are all in the red. I don't think the earnings reports were that great today, and people are just digesting them. And since the stock market went down a bit, that hurts crypto as well. The Dow is down 290 points. NASDAQ, which is very similar to crypto, is down 157 points. S&P is down 55 points. So the thing is, like, the NASDAQ proportionally is down more than the Dow and the S&P, and that generally spells bad things for crypto. Now, the other reason, and the main reason I bet, is probably the Fed, that old slyly fox, Jerome Powell. They did raise interest rates, and yield rates, 10-year yield rates, actually are at its highest in a long time, which means the competition for crypto is very, very extreme. Obviously, yield rates on treasury bonds. Treasury bonds are a very safe investment. The US dollar is not going anywhere, and it's going to continue to be dominant for quite a while. So people see that as a safe investment, and getting 5% for 10 years compounded is very, very nice for some people. So they'd rather take the safe investment than take the risky investment in crypto. When those bond rates come down to 2-3%, then people want to invest in crypto because the return is very, very low. But when they're at 5-6% like they are right now, people would rather invest in those bonds because it's a safe, solid investment that gets 5%. And the cryptos that don't really have any staking, I think this is really going to hurt them even more, because you can get a solid 5-6% from just staking US Treasury bonds, whereas if you're just holding those kind of cryptos, you can't really get any kind of passive return. With the market being down so far for so long, they don't really see too many appreciation returns either. So they're not going to be too kind to those cryptos that don't really have staking or some way to generate yield that is fairly risk-free, like the treasury bonds. So obviously, the long-term treasury bonds are biting into crypto's market share as well. So, and I think like the 10-year treasury bonds might actually continue to inch up, because the Fed minutes were not very, very bullish for crypto, unfortunately. The Fed did hint at even more interest rate hikes, which would actually make crypto even more unattractive for people. Because, why would you risk your money in a volatile asset without regulatory clarity when you can actually just put your money safe in some treasury bonds, get your 5% a year? And think about it. If you have $1 million, the thing is, if you put in a 5% treasury bond, you are guaranteed, locked in, $50,000 worth of profits each year for the next 10 years. $60,000 if it's up to 6%, which is actually getting there. So, many people are going to take that type of free money. And especially if your crypto doesn't have any kind of like staking, that's really, really going to hurt you at this time. And like I said, one of the main reasons is because of futures prospects. And since they did indicate, unfortunately, that they were actually going to raise rates even more because they fear inflation, they might just be using that as an excuse, obviously, at this point. And inflation, because of the gas prices, may not actually come down anytime soon. They might raise the rates like once or twice again and push it up even closer to 6%. The Fed's already achieved its rate hike. of like 5.5% now, but they might raise that cap even more because inflation isn't back down to the 2% they want. The problem is like a lot of the inflation stuff is actually housing, and raising those interest rates, like I don't think it actually brings rent down. It actually just raises rent. So I don't know if those interest rate hikes are really working. And part of it is gas. If gas is expensive, even though it's not part of the core CPI, everything becomes expensive because it takes more money to transport food and stuff like that. So food becomes more expensive, and it doesn't really matter how high the Fed hikes rates. Because like if gas is actually like expensive, then you can't really do anything about it. That's more of a market deal, and it's more of a global deal, and that's controlled mostly by OPEC and not the Fed. And since OPEC is going to restrict supply until they get those prices up, I don't know how much the Fed can actually do about that, or how much the United States can do about that besides producing more of their own oil. I do think they should actually open up those pipelines just as a threat to produce more oil, both from the United States itself and Canada. And that might actually teach those OPEC countries a lesson where they would actually open up their like oil fields and have more gas. The US more or less is self-sufficient, but the global oil market is what's actually controlling everything. And the threat of dumping a lot more gallons in from the US or Canada, I do actually think would actually balance out the markets a lot more right now than, the current policy. I don't like the current energy policy. They do kind of suck. And I think like they are playing in to making things very, very expensive for Americans. And that's going to really, really hurt our crypto prospects as well. Because our crypto prospects depend so much on the interest rate right now. And right now, the interest rate is just not very good at this point. They also want to ban ransomware payments, because like there's a lot of people that basically like install something on your computer and then they hold you for ransom at this point, and until you pay them X amount of money. And they want to ban those, but if they actually kind of ban those, then people won't really have a way to get out of that ransomware, and they'll just get all their money stolen. So it is like a catch-22 type of thing. Like, do you ban it and try to basically close off one of the doors for criminals to get away free, but if you do that, you force criminals to take even more drastic action. So it is definitely a give and take thing. And like as back to the price, I do see Bitcoin bottoming out at around $25,000. I don't really think it's going to go much lower than that. I guess if they raise the rates by 50 basis points, 100 basis points next time around, which I don't think they'll actually do, it could definitely go lower. We did go below $27,000 once. And that was way, way back at the beginning of the summer. I think we went to like 26.5, maybe even like 25.8 at that point. But we did bounce back within the next few weeks, and I think that's what's going to happen. This sudden drop is really unwarranted at this point. And yes, like the Fed minutes weren't bullish, but the thing is, like, I don't think it should have this kind of effect. So I expect us to bounce back up to about 28,000 tomorrow. I know some people who are really looking at the cycle prices are thinking even lower, because generally, like, the September is generally not a very good month for crypto. And the fall before the halving sometimes generally is not very good for crypto. But I don't think that really has to apply. I do think the macroeconomic conditions are pointing to a lot of headwinds within the next 2 months because of the Ripple and the secondary market appeal on the case, and because the Fed is basically not relenting in their quest to actually reduce inflation by hiking up the interest rates to infinity. So right now, like, I would definitely buy mostly Bitcoin if you're determined to buy. It might just be prudent to hold your money in like cash at this point, just to see like what other deals you can push up. But if you want to buy crypto, I would definitely get into Bitcoin right now, because all the other coins are going to be more risky and they're going to dump a lot more than Bitcoin. I think like by November, December, if you're in Bitcoin, you'll be able to like ratio those like smaller coins at a much better price. And I think everything will start to settle down and maybe even go up around Christmas time as we get closer to the halving. As we get closer to the halving, I think that pressure from the halving will actually force things up. And like, in January, February, March, honestly, I definitely think it'll go up as those ETFs actually get processed. I know that FundStrat manager Tom Lee thinks we're going to 125,000 or 150,000 or whatever by the end of 2024. That can definitely be possible. But I do actually see us hitting like 40,000 at least, maybe 50,000 before the next halving, because that is kind of the cutoff price. So I think there is a limit on how much crypto can actually fall in the next few months. And I'm looking at 25,000 as a bottom. Some people are saying 23,000 because of certain metrics. I mean, like we just fell below 27K, but some people are saying 23K, and I guess that's possible, but I don't think we're actually going to fall below 20K. And a lot of people are really hoping that we fall below 20K because they want to pick up some cheap crypto since they missed the 15K fall last time. But without a stimulus like another stimulant like another SBF or another Do Kwon, I don't think we'll actually fall that far. And I do think like this particular drop, we will probably recover some, maybe around 28 or 28.5 in the next couple of days. So if you want to buy this dip, I think like this is not a bad time to buy the dip. So that's the news for today. Let me know what you think. Like and subscribe, hit that bell notifications button. Thank you and have a nice day.